Hello, everybody. Welcome back to another week at the Better Events Podcast. This is Mary Davidson, one of your co-hosts, and in today's episode, we are talking all about Beyond the Bookkeeping, Fractional CFO for Event Planners with Kellé Thorpe. Kellé is a wonderful guest. We learned so much from her episode today as a fractional CFO and also just some really, really great tips that you can use as a business owner. And so be sure to tune into this episode. Lots and lots of wonderful things. Let's go ahead and get into it.
Welcome to the Better Events Podcast. Join two event strategists, Logan Clements and Mary Davidson, who believe we can all create, host, and attend better events. In this podcast, you will learn about event strategy and actions that you can use today as an event host, planner, or manager. Hear directly from the people who are creating innovative and inspiring events today and tomorrow, and grow your business along the way. Now, let's get started, and thanks for listening to the Better Events Podcast.
Hi, friends. Welcome back to another episode of the Better Events Podcast. I'm one of your co-hosts, Logan Clements. And this week, we say it every time we have a guest, but I'm particularly enthusiastic about this topic we're about to dive in here with Kellé Thorpe, all about finances as a business owner, but also for event pros out there. So don't turn this off. Even if you're an in-house planner, you're going to have some great financial tidbits to take away. Without further ado, Mary, I'm going to turn it over to you to introduce our guest.
I am so excited to introduce our guest today. Kellé Thorpe is a fractional CFO and founder of Kommas with Kellé, where she partners with service-based business owners to turn profitability into financial forecasting. With a background in corporate finance and a passion for empowering visionary CEOs, she specializes in aligning strategy with sustainable growth, creating multi-million-dollar lifestyle businesses. Her firm supports event professionals in making confident, data-driven decisions that allows them to assess exactly how much they will make on every project, which I would love to hear more about. So we are so excited to have you here today, Kellé. Is there anything else that you'd like to add?
Yeah, everyone can just follow me at kommaswithkellé.com, and we'll get more into some other cool things we have going on a little later, I think. But thanks for having me, ladies.
Yeah, I'm so excited. We always tell our listeners, why we invited you on. And Kellé and I actually are a lovely internet connection. We connected via email just over some similar interests and potentially doing some virtual things together. And then we got talking, and I was like, Kellé, I feel like you have so much to add for our podcast listener group, because listeners, she's a fractional CFO, which if you're like, Logan, I don't know what that means. Don't worry. I didn't either. She's going to explain it all to us. But there was just some key tidbits that I feel like she could fill a gap that Mary and I have talked about our finances here on the podcast before, but neither of us specialize in that. It's kind of more of a symptom of being a business owner. So Kellé, first off, we love to be very broad with our audience and start from the beginning. So how do you define fractional CFO for our listeners?
Yeah, so fractional is like the new buzzword, I feel like, in business entrepreneurship. So fractional CFO particularly is a C-level executive that usually that used to, in my case, work at large corporations and overseeing multi-millions of dollars in money, that has now taken that part-time and now works in businesses fractionally, so on a part-time basis, to provide you that same level of strategic insight, financial planning, leadership if you have an in-house accounting team, but more so for smaller businesses. It really is pushing them to go beyond bookkeeping is the best way I tell new potential clients that come on board. It's beyond bookkeeping and having a CFO in your back pocket to give you financial planning and strategic insight in your business.
I love that explanation. That makes it like extremely clear. And as a small business owner, as I hear you say that, I'm like, what a gift that would be to be able to go beyond bookkeeping. So I'm already hooked and excited to learn more. So thank you for that explanation. And then who are your typical clients in this case?
So I accidentally fell into entrepreneurship too, but I definitely accidentally fell into working with the niche of event management professionals. What I found cool about it is working with women-owned service-based businesses overall, and particularly in event management professionals, is I come from a corporate law firm accounting background. And so in law firm accounting, you had what we call two sides of billing. There was the client side and then internal side. And it's very similar in event management, where you have how much did you make on this specific project? how much is the business doing overall. So that's why we enjoy working with event management professionals, because we are able to get the best gratification on seeing them drive their profitability up by going that granular into their accounting, but also give them the results so they can see exactly how much they're making.
And that is so simple, it sounds like, but also like so difficult. We're big fans here of the Profit First book, or I personally am, and we've done parts of sessions about it in our conference, because I had that very real feeling of looking at my profit loss statement and being like, wow, I made profit. Okay, where's the money? And my bookkeeper was like, you already spent it. And I was very confused that there could be this, how the math worked out. So you're filling a big need when it comes to that. And it's interesting that you've fallen into the niche of event managers. So thinking about those event managers you work with or event planners, what are some common mistakes that you see them making when it comes to their finances?
Oh gosh. So I think the number one mistake would probably be just kind of what I just touched on, not tracking their finances per event that granular. And it's usually because, just like you said, you guys are experts at event management and not you. The finances usually come later. How do I bid on this contract to hopefully be profitable? And then how do I pay everyone that I have to hire to work this project with me? And that's usually where it lands until the next payment comes in. But the biggest mistake I see is not going as granular as breaking out, which we call COGS, the good old accounting term, cost of goods or cost of services, to know just what you were saying. When you look at your profit and loss statement, the bookkeepers help you with what's already happened in the business. So it's what's already been spent. The profit and loss statement tells us that. But if your profit and loss statement is just telling us overhead, then you don't know what exactly you made on projects and how profitable certain projects were. So the biggest mistake I see is not breaking out the cost of services in your profit line items, which is what a fractional CFO does and goes as granular as that to help you break out those pieces. So you're not waiting till tax season to see how much am I going to owe in taxes, or how much can I really pay myself? Can I pay myself a little bit more? Because I thought I hit big on this project, but what does hit big even look like? So I think that's the biggest thing, not tracking your COGS versus your overhead cost.
I love these sentiments because, like, I think Logan could say something similar. So I've been in business for 5 years. Logan's been in business for 8 years, 9 years. And it's just been like this crazy journey, kind of like you're saying, Kellé. We're event professionals, and so we are learning how to do these other things. But on top of that, trying to figure out all the other stuff of running a business. And it's only been the last 3 months that I have actually sat down once a month and figured out if I can pay myself. And I'm like, I hate that I have to say that, but it's just taken me so long to even wrap my brain around how to do it, and then to be able to see consistencies so I can have more data and just all the things. And so everything you're saying, it sounds easy, but it takes time. And so we're grateful to have, professionals like you, most certainly. And one of those things is financial forecasting. So what does financial forecasting mean, and how can listeners use it in their businesses?
So forecasting is a huge importance. I love that you gave that example, and I appreciate your transparency in that, because once a month is great. Most people, when they come on board, they haven't looked at it in 6 to maybe a year. It's almost tax time. So the importance of forecasting is so key, and it's the best way to predict the future income, expenses, and cash flow into your business. So imagine having someone that you're partnering with that can meet with you monthly and tell you how much you can pay yourself for the next 6 months. That's what forecasting is. Forecasting is linking up with a fractional CFO. You're not sitting down having to figure out all that data. We've already excavated the data for you, and you come to the meeting not to look over the P&L and balance sheet alone, but to say, this is the P&L and balance sheet and let's talk about this forecast. So for event professionals, this might mean knowing many events you need to book and how many events you need to book in 1 quarter. It may look like oh, last year your revenue was much higher than where we are this year. Is there an event you could actually go back and look and see that you did that, forgot to reach out, so we can reach out about doing that event again the next year? It's stuff like that. So we're planning for the slower seasons ahead of time, so we're not stressed out when this time and the calendar dips and it's like, oh crap, what happened? Where's my revenue?
Yeah, I probably am doing the like simpleton version of what you offer, Kellé. Because for me, I realized with all my different clients, they all have different payment terms, and sometimes in the power dynamic, I'm able to set them, and in other ones, when I work for larger agencies, they have company-wide policies of how fast or slow they pay. And I was tracking how I thought I was tracking pretty well, but I realized that I was tracking when I invoiced them. And that was not helpful for me to know why I all of a sudden was like, why do I feel squeezed? But I've been really busy. And it's because I had several people who were slow. So I have an Excel sheet now that I track and I forecast based on payment terms. So I have like a cell that I put, 15, 30, or 45 days. And then I have it by the month. So I can see up through the end of the year. And I've now started doing it. I do it at the end of the year for the following year and then update it as regularly as I can, just to know, because I've learned my like financially good months don't really align with my business months. And I know that's simple compared, but would love your thoughts on that.
No, I love that, because you open up, and we're not going to have a whole boring accounting lesson here. I'm probably one of the most interesting accountants you ever meet that talks this daggone much in the first place. So I'm not going to take you down cash versus accrual back to college, but that's basically what you just talked about. And it's talking about when is money coming in. And that is important to track, because, and also the other piece that a fractional CFO helps you with is following up on those pieces. So that's why we don't brand as a bookkeeping firm. We do the bookkeeping piece of it too. But a large part of fractional CFO is that forecasting, future planning, because if you're full-time in your business, you need to have someone forecasting and future planning. So we will also look at just what you're doing, Logan. What's the timeline on payments? And I find, fortunately and unfortunately, that the larger the company is you work with, typically the more money you can make, but the longer they're going to take to pay you, right? So it's like, how do we plan for those ebbs and flows when you know you're about to bring in that 5-6 figure contract, but they're going to take 60, 90 days to pay you, and you got all these contractors that have helped you typically, and you need to pay? What's the plan for that? And that's what fractional CFO support gives. So you're in essence doing a little bit of that with your spreadsheet.
Proud of my spreadsheets. I try, but that was probably, Mary talks about evolution as a business owner. I think I didn't have that aha moment until maybe 2 years ago. So like six and a half years in.
Okay.
It's progress though. So that's what matters. We're always improving. Kellé, what would you say is the best advice for an event planner who's looking to increase their profits as a business owner?
Well, first I can say it definitely doesn't happen by working harder and booking more events. So let's scratch that out. That's not going to help you to increase. No.
Can you say it one more time for the people in the back, Kellé?
Right. Working harder does not increase profitability. It comes from smarter pricing. That's where it starts. And that's where most people are afraid to start, because they're afraid of losing a contract or losing a client, or I've been working with this person for so long and I don't want to lose the relationship. And that is more of a reason why you need to assess the pricing, because usually if you've been working for them for a long time, they're paying a long old rate and it's not working. So it definitely comes from smarter pricing. Again, I know I'm sounding like a broken record, but planning ahead with forecasting and just knowing the overall, Mary, you said it well, making data-driven decisions. That really is where profitability comes in, and going as granular as every single contract and not being afraid. If you come across a fractional CFO, hop on their calendar for a consult. We do free business advisory sessions where I'll hop on and look at your spreadsheet, your QuickBooks to see what's going on. And I'll tell you in that free session what I see, what the gaps are, because that's the only way you're going to, if your data isn't accurate and you're not computing it properly into the system, then it's not great data. So you're already not making good decisions on good data. So definitely it comes from smarter pricing and planning ahead.
I had a follow-up question on that, and I don't want you to give all your secrets away today. So just like high level, if you could summarize it. Um, when I hear that, I'm like, well, but like, how do I know if I am charging enough? And so I think some of that goes into like, what is your time worth? And like you were saying before, like your cost of goods and all of those things. But I obviously don't have a financial background. So like if you could like share any more advice on things that we could start just kind of looking at, and then we can reach out to a professional like you to help us tie it all together.
Yeah, that's a huge question. That's probably the hardest one you asked me because it is pretty
Sorry.
broad. Because it is pretty broad. So yes, always start with your value. And really, when you really say start with your, like really start with your value. I would say for people that are newbies out there, just a quick tip I will give of what I did when I started out. So I was a C-suite executive in corporate for almost 20 years. I didn't plan to start a business. I started out doing some consulting work from a prior employer, and they were like, "We don't want to hire another CFO. Why can't you continue to do this job and your new job?" And I'm like, "You guys are crazy." So I started this consulting business, and immediately I didn't have a business building. I got lucky to be as profitable and successful as I've been over the last 5 years because I have a financial gift, right? But I'm like everyone else when it comes to all other areas of my business. But what I did was I literally took my then salary and doubled it. And that was my starting rate that I gave everybody. So I didn't expect people to be like, okay, literally no one questioned it. So my first year, I doubled my salary in my business when I came out because no one haggled me. And I was like, I was waiting for somebody to come down. That's why I did it. Because I knew I wouldn't go lower than my salary, what my salary was, but I knew double, I thought was a bit absurd, and it's not. And so I want people to take that and realize what your value is. And it is more than what you were getting paid in any corporate seat or any hourly wage than you were. So start there. Then take all of your, it's hard here because this is when we get in the boring finance stuff, right? No one wants to sit down and take all their numbers and make sure it all matches up. But it's the reality. You really have to go that granular. But again, I will say if you have a bookkeeper, take I would say the prior year P&Ls and balance sheets, take the number that you were working from there and make sure you're at least making enough to pay yourself. And if you're not, start there and then reach out to a fractional CFO that gives you a free consult so you can at least have some type of foundational guidance. But that really is a big picture assessment. And it's something we do within the first 30 days of working with you because we want to know, that's my goal. It's like you said in my bio, we build lifestyle businesses, right? Many of people build a business that is you're working to support this business, and that should not be the case. You should be working because your business needs to fund this personal life. And I want your personal life to be the priority. So that's why the first 30 days of working together, we do that whole formula that's long gone out of why and how much you're paying yourself. But on a granular scale, I would say start with your basic last year financials, what those totals were. Think about what your value was the last corporate job you had and double it at least.
Yeah. And events are probably an interesting one. And we talk about it here on the pod of like, because you can have planners out there charging $20 an hour, and you can have planners out there charging $220 an hour, and, anything in between. And how arbitrary one can feel, and what's expensive to one person is cheap to another from a client perspective. So that's, I think, something constantly our listeners are dealing with. And it does we always say factor in your region. If you're trying to do things more local versus willing to travel, factor in whatever your financial situation is. If you're the sole breadwinner or you're part of a couple and you have a safety net, like there's no right or wrong, but I really like your approach because that's, I feel like, a very rational way to think through it all. And if it's something that feels really hard, if you're a listener that's brand new, I would definitely start implementing that as soon as you get some experience under your belt, because yes, you don't want to be underpaid for what you do. And that's something I see across the industry a lot.
You just talked that. I'm sorry, I want to jump in before I forget the train of thought. But you actually just brought up something too that is important, is knowing your target and sticking within that target. Because I find that people chase money because it's a scarcity mindset in entrepreneurship, right? You don't know when that next event is going to come in. It's like, okay, this isn't my target, but maybe I will do it. And then it comes out, it was a horrible event. You hated working for them. You just were, it was all, and you made $1,000 and it wasn't even worth the stress. And you're like, why did I do that? Right. We've all taken on clients and projects that were like, why? So I would say your region, your area, what you need to support your lifestyle. But the number one thing is, don't just take money because you're scared. Don't, because you don't know when the next event is coming in. It'll be okay. Trust me, it will be okay. You'll get the event that's going to pay you whatever your rate is. Because, and there's a large scale, a long scale in accounting and bookkeeping, right? You have some bookkeepers that charge, you can find bookkeepers that are now overseas for $200 a month. I don't know what's happening in your books, and I wouldn't condone that, but you can. And then you can find fractional CFO services that start at about $1,000 a month, right? But don't let the rate scare you away, because there's value, just like there's value in what you're doing, and people understand why you're worth $200 a month versus $20 a month. They know the quality, right? They know the quality of what the output is they're going to get from you guys when you guys support their event. It's the same thing here. I tell clients, I'm not going to take you on if I know that you're not going to see the ROI within the first 30 to 60 days of working with us. Because every single client I've had come in our door, I see the ROI immediately, and I'm able to show them, here are the gaps in your financials. And it's always upwards of $60,000, $70,000 easily, because there's so many gaps. So yeah, I totally agree. There is a wide spectrum, and it comes down to demographic, and it also comes down to knowing your audience and not being scared to just focus on that audience.
So many questions for you, Kellé, but I know we're coming close to time. But what you've mentioned it a little bit, but so much of what we do with events can sometimes be inconsistent income and cash flow. Like we have busy seasons and we have slow seasons. I don't know, Mary, I feel like both of us are slow seasons are getting smaller and smaller, which is a good thing, but also something that you need to manage on the financial end. So what advice do you have for planners who have inconsistent cash flow?
I would say use your busy season to fund your off season. And in order for you to do that, you have to have great tracking to know when the busy and when the off season is, right? So I want you to build a reserve. I rarely use the word budget because it always scares people away. But a budget is just a forecast. That's all it is. It's a forecast to help you know when the ebbs and flows are happening. So you can build a reserve during those. It sounds so simple, but it's true. Just build that reserve of savings during that busy season. And then on your monthly expenses, when you're trying to figure it out, you won't be so anxious during the slower months. So I would say plan ahead as it pertains to if you have marketing expenses, like what months does it mean you need to go harder in that area of marketing? What months can you scale back? But be very intentional about your spending all year around, not just during a slower season or busy season. Be more full cycle and paying attention to your finances overall. And then I feel like, and I see it truly does balance out over time. So that way you can use your not busy seasons as vacation time and not have to worry about, oh, it's a not busy, so I can't really spend or I can't really travel. No, because we've planned for that already. So I would say definitely plan ahead, go all the way through the year and look at those ebbs and flows to reduce your expenses throughout the year overall, but build that cash reserve.
I love what you said so much. Like it's resonating a lot based on what I said earlier. This is like I'm finally trying to figure out this stuff, and has been like completely game changing this year. So what I love about you said, and for listeners, get the information. Like there's so much value and all of this information that you may have at your fingertips, but are too, overwhelmed or don't have time to just take the time and kind of look at what all of those things are that you just mentioned. And it's so empowering and powerful to be able to know, like, if you like what you can actually do and how your business is, and if you can take time off. And I love what you said about making up for it, in your busy season so that you can have time. And that's like, as a business owner, why I think a lot of us do this is because the freedom and the flexibility that we want, but then get so sucked up into this hustle because there's like financial concerns maybe. And it's just this fun little circle that we, spiral in. And so anyway, just listeners, if you want to go back to what Kellé just said, I think for me that is what stands out a lot. I think it's super important. So thank you for that. You've given us so many wonderful tips today. If there is one key financial tip that you could leave our listeners with, what would it be?
I'm trying to think of one that's like not way accounting, but one that's not like make a money date. Everyone says that one. I feel like in my area, right? I would say either if you're doing your own bookkeeping or you have a bookkeeper, have them go back and ensure that your cost of goods or cost of services are taken out of your overhead cost. Do a quick chat GPT, ask what's cost of goods, what's cost of services. Quickly, in your industry, cost of goods, cost of services is something like what you pay your contractors. That's considered a COGS. Any cost that you take on for an event that a client is supposed to pay you back for, but may or may not, those are COGS. Stuff like that. Anything that directly is tied to a specific event. Break out your profit and loss statements and costs. It literally only takes a couple of categories. Your bookkeeper can help you with that. Or if you're DIYing, you can do chat GPT and figure out how to do it. If you need support or you just want us to set it up, we do a 3-week session to just set up your books and train you real quick and you can go. But that's what I would say. My number one tip would be break out those direct client costs from your overhead costs so you can see how much you're really making.
Yeah, it's those sneaky hidden costs that you think you're factoring in, but you aren't. Kellé, this has been amazing. Is there anything else you'd like to add for our listeners? And if you want to end with where they can find you to learn more.
Sure. I'm on all platforms at Kommas with Kellé, and I'm sure it'll be in the show notes. So I'm not going to spell all of that out. But also, we have a symposium coming up. So if you go to businesswomenwithessence.com, and it's going to be really cool because one thing I'm doing this year is partnering with business attorneys and wealth planners. Because what I find is as I work with event professionals, I'm guiding them in areas that often get muddy, like we're agreeing to pay you $100K a year, but it's still not enough to help your personal life. What the heck is going on here? And then that bleeds into wealth planning and advising and retirement. So now I've teamed up with a couple of wealth planners and business attorneys to help you with your contracts as well. And we're doing a symposium together, 3 ladies, powerhouse women, to make it more intimate. We're having a fireside chat to talk to you more about how to grow, scale your businesses in ways that you're protecting yourself and your personal life. So that's businesswomenwithessence.com.
Thank you so much, Kellé. I was just looking it up and I am intrigued. So I'm excited to learn more. And I hope our listeners are as well. And just thank you so much again for being here today and sharing your knowledge with us.
Thanks for having me, Mary and Logan.
Have a wonderful rest of your day. And listeners, before you leave us, we have our bonus tip from today, which Logan has.
Yes, we try. It's usually not attached to our topic. Mine slightly attached to money, but ask your vendors for the deadline to make any changes without a budget impact to your scope of work. So this is something I do for all of my AV and production vendors I source, because we just know with events, changes are going to happen. But make sure you have that conversation early. I find if you try to do it last minute, they're less likely to accommodate. But from the jump, if you say, what's the deadline for you to make any adjustments to this, to add equipment or remove equipment, and not get charged, you'll find that really varies based on the vendor. Sometimes it's 2 weeks ahead of time, or the week of, or even like 72 hours before. But you just want this in your back pocket so you're not overpaying for any equipment that you didn't end up needing, or it gives you some time to lock in any additional equipment you need. Again, I'm using words from the production world, but I would do this with any of your vendors. We all know events have things that adjust, and we're all used to it. So just make sure you ask if it's not clearly laid out in their contract.
I love it, Logan. Thank you. Great bonus tip today. And thank you, everyone, for listening to another episode of the Better Events Podcast. You can find us on Instagram, Facebook, and LinkedIn at Better Events Pod. You can email us at bettereventspod@gmail.com. You can also connect with Logan and I and Kellé directly on LinkedIn. We'd love to see you there and hear from you. If you want more Better Events content, be sure to check out our private community on Substack. We're also in Slack. And thanks so much for listening. We will be back in your feeds again next Wednesday.